Welcome to the Alternative Investing Club show. This is the show where investors can get a sneak peek into a variety of different operators. We interview operators all the time here. These people are either private equity managers, fund managers, they manage real estate, oil and gas, renewable energy products, anything that's private equity that individuals can invest into. And if you're interested in joining our community, please go to the alternativeinvestingclub.com. You'll have the schedule of our speakers posted there, as well as opportunities to get involved with the group. So today we want to welcome Javar Avery from Sun and Moon Capital. Javar, welcome to the Alternative Investing Club show. Can you tell us a little bit about give us like a 2 to 3 minute overview of where you started and what your background is?
Yeah, so no, thanks for first of all for having me. Yeah, my name is Javar Avery. I always tell people I'm actually just a guy like everyone else, but my title of the company is Chairman and CEO of Sun and Moon Capital. I'm originally from the Norfolk, Virginia areas where I was raised, and now I'm currently reside in Wilmington, North Carolina. With I'm married, I've got four wonderful, wonderful kids. And yeah, and again, CEO and chairman of Sun Capital. Actually started the firm. Maybe it was about maybe 6, 7 years ago. It started with a small family-owned coffee shop acquisition that I did with through some family and friends, right? And then from there, the business we just kept getting better and better, and we wanted to start doing larger deals. But the concept of the space that we invest in is essentially what I'm sure you asked me about. That all started with that coffee sandwich shop in Hampton, Virginia, and we exited that business. And then we went into a toxicology laboratory in Dallas. So I spent some time there, about 8 years there. We exited that small little opportunity, and now I'm here in the North Carolina area. And we've got a great team and great partner, and just up the bat trying to hit singles. That's our whole model, right? We're just up the bat trying to hit singles.
Yeah, yeah. Well, there's a lot there. First of all, I love the fact that you led off with your family.
Yeah,
And I love my family too. That's honestly they're the reason I do this, right?
that's right. That's right.
So,
That's right.
so thank you for that. And one thing to note here is we're usually interviewing real estate people. That tends to be our mainstay.
Sure.
But you're fairly different. You're buying and selling businesses, and so you've got a similar yet different model that we can really explore here. I do like the fact that you went from a coffee shop to a toxicology lab, but there's a
Yeah.
joke in there somewhere.
Yeah. Well, I'll tell you what, the coffee shop was again, Sun and Moon Capital started out of an entrepreneurial spirit of mine, right? I was in college, my BA is in finance, but in college, I can't remember, it was an economics class that talked about M&A for whatever reason. And I became so infatuated with the subject that I just began to study and learn so as much as I can about buying companies. And honestly, I dropped out to acquire the coffee shop. So this is an entrepreneurial journey at its finest, right? I decided, you know what, I want to do deals. Now I went to my wife and I said, I want to buy companies. And so I left college to go buy this coffee shop that quite frankly I wasn't that interested in buying it. It was my every intention was to just try to figure out how to value the company, how to learn about the company, right? You're just trying to figure things out. And once I put together a valuation that I thought, man, if we could get this business at this price, it may be worth it. And I had no idea that the ownership would accept the price, but they did, and ultimately we ended up as owners of a toxicology lab. But yeah, sorry, as a coffee shop, of a coffee business. And then from there, I had some partners doing some deal stuff in the Texas area, getting into the tox space. I began to learn about that a little more. And again, we just started adding to the business model, the type of companies that we wanted to kind of go target. Learned that we don't like the coffee business as much as we thought we did. But anyway, it was a great learning lesson. So yeah,
Okay. So for a lot of our members who are into real estate or at least, have had a lot of real estate education through this club, what is M&A? Can you describe that to our viewers?
Yeah, so M&A, mergers and acquisitions, right? It's really either buying a company or merging a company with another company, right? And
Mhm.
from that's just from a simplistic perspective. That's really what it is, right? And if you look at it from a asset class, you would just consider it private equity.
Okay. So just like a syndicator might buy a particular asset, a building of some sort,
Yes,
bring investors in. Here, you're talking about raising capital from investors and buying businesses and boosting the value of the business is the main asset.
that's right. That's right. So it's funny. I always hear people say, "Well, there's some, you know, it's somewhat analogous, right? When you look at a real estate investor and a business, a private equity investor, right? It's still private capital, right? I mean, the investor, they can have a REIT, I guess, or something like that, but essentially they go out and get private capital to acquire a building or a piece of real estate. We go out and get private capital to just acquire a cash flowing company, right? That's to me,
Hmm.
it's
What?
some similar things to it.
Yeah,
Some
it's
similarities.
remarkably similar, actually. The two industries, when I started looking at M&A, what I realized is that just like in commercial real estate, where you create your model, your financial model of the asset by
Yep,
looking at the income, the expenses over a period of time, and then evaluating that on the cap rate, or another way of saying that is a multiple of the net operating income.
that's
Same
right.
thing's true with a business, right? You've
That's
got
right.
your income, your expenses, and then based on the industry, and there's different multipliers that the company is usually evaluated at.
That's right. That's right. And it's typically based on EBITDA, right? You're
Mhm.
trying to improve that EBITDA, right? And get a better multiple or something of that nature. I think the main differences comes in with that it's more of a people driven thing in a private company, right? Versus a piece of real estate, right? Again, I'm not in real estate. I'm just making some assumptions over kind of things that I've seen and learned and trying to make some parallels here. I just think, I guess, with the real estate, like you have a building, you can hire a property manager, right? That over kind of see that there isn't much in the way of operations, is what I'm kind of assuming. Versus you look at a company like, we're in the process of closing or looking to close a janitorial company. That company has 65 employees. That company has a manager. So you've got all these other moving parts, right? That you have to account for and think through. That you know may make it a little bit more riskier if you are an investor in a deal.
Maybe a little riskier, but frankly, you can increase the value of a business most likely more than you can increase the value of a piece of real estate.
There you go.
So
There's a
there's the
trade-off, right?
upside too.
Yep. Yep, absolutely.
All right. So when you were looking at this coffee shop and you were just getting into M&A, you were just kind of
Yeah.
figuring out the business model here. What took you by surprise? What challenges did you face in acquiring that first business?
Um, Raising that small, so the interesting thing about our field is, and I it's a great question. Raising that tenuous amount of capital, right, to do that deal is harder. Like, we can go out and raise $5 million before we raise $1 million. Like,
Mm.
it's kind of, it's just the way the market is set up, right? So I think raising that type of money, number one. Number two, the due diligence process that we have in place today didn't exist then. That's why I say it was a great learning lesson. I mean, we've got some of the best attorneys, we got some of the best accountants now. So when we do a deal today, it's massively different from when we did that deal. But just the sheer lack of the due diligence process, right? And then I guess, like I say, raising that small amount of capital was really the biggest issue there. You had to find a ton of individuals that wanted to do a deal versus, like, and we still kind of have that problem today a little bit because of the particular part of the market we focus on to do deals in. But we
Mhm.
also can find, a couple more $1 million easier than we can. So I would say that those two things.
When you say that, are you talking about going to large individual investors or private equity firms, or how I how are you
Yeah.
doing
Yeah, so our deals, just to give you some context on where we invest, we call it the micro middle market, right? So you have the middle market, which is anything 2 million of EBITDA and up, right? That's where most of your large private equity family office folks play, right? So, but what I did was when we got out the coffee shop, I said, you know, these small businesses, we were able to add value to that coffee shop. We actually expanded it to a second location. We were able to add some value. And I said, you know what? There's just more juice to squeeze in some of these smaller companies. Now, maybe
Okay.
this one is too small, but where can we get to where we can get some attractive, like, commercial lending, things like that, right? We don't really have to go pass the hat around all the time. And so what I learned was like there's this micro market, and we call it anywhere between 1 to 2 million of EBITDA. Typically, 1.5 is kind of a nice sweet spot. In that market right there are players that you can go and get capital from, whether it's a private equity firm we want to partner with. And I'm getting to the capital sources here right now. So it's either a private equity firm. We do have some high net worth investors, right? That will come in
Hmm.
and maybe write a $200,000 check, $300,000 check. But ultimately, it's family office money and some private equity money. And then if we get some mezzanine debt in there, they'll typically put a slug of equity in the deal. So we still play in a smaller market. So it's still a challenge a little bit, but we're up market enough to where we've got some traction for some capital partners.
Okay. Do you factor in other types of there are a variety of other types of loans in M&A that you usually
Hmm.
can't get in a real estate oriented business, like equipment loans.
Hmm.
Or does that factor in? Those tend to be smaller, and they're only covering the value of the equipment, but based on the business that you're in, that could be a significant portion of your balance sheet. Um, do you go all with private individuals that are actually loaning against the business, or do you do things like equipment loans?
So both, right? If we look at, so most of our mandate is really around kind of asset light, low capex businesses. So it's kind of hard for us. But like for instance, we're in the middle of a deal right now that we think we may put an offer in on. Well, that deal is in the construction space, so you can imagine. You're right, right? You just go down the
Yeah.
balance sheet and you see $7-8 million of equipment. So yes, we'll look at both, right? We'll look at companies that will do an ABL, right? Asset based lending on the equipment. And then we look at the ones that'll do more of a cash flow lending type of situation. We never get into personal guarantee things or anything like that. So,
Right.
those are the two avenues that we typically take for structuring a deal.
What's your buy criteria now? You had a coffee shop, you had a toxicology lab. Those seem
Yep.
fairly different. You're talking about a construction company now. What
Yep.
what's your buy box? What
So
do you look for?
it's typically low capex, mission critical business service companies. That's how we kind of put it that way, right? So you think of a mission critical service, toxicology. What were we doing there? It was very mission critical. We were taking the urine from the doctor, testing it so he can determine whether he wants to give this patient opioids. Very, very mission critical, right? You look at this janitorial business that we currently are under LOI with. They clean airports. They clean very mission critical, right? The airport need they need their airports clean. So when you think about us, it's more just kind of like that, simple, dirty, just mission critical service business that we can add value to with our skill sets.
Yeah, that's great. Those companies, and it's interesting too. You can kind of balance your portfolio with companies that, like for instance, a coffee shop might be fairly impacted by something like COVID, but
Right.
janitorial services might actually be improved
Bingo.
by something like
Bingo.
COVID. So
Bingo.
you can
And
really
and
come
to
in and go
yeah,
ahead.
and to get to your point about the construction business, so we don't really when we look at construction, like you're making a bet around the tailwinds, right? We're looking at, okay, is there a tailwind here? But it's also how mission critical is the construction business to the developer, right? So we don't want to get into an electrical contractor, right? We want to get into a business where this developer is relying on this individual vertically, like to make things happen vertically and horizontally, possibly, right? So that means that they this contractor, if you will, he is responsible for the earthwork. He's responsible for the
Mhm.
things underneath, like such a mission critical component to the developer getting their job done. That's how we look at this business.
How did you go about building your deal flow? Was it all calling up M&A brokers and you just maintain a list of brokers and they send you things, or Are there other techniques that you used, going online, biz buy sell, that sort of thing?
Yeah, so a combination of both. I always like to tell people they see Sun and Moon Capital today. I said, look, this is the stuff you see today is you almost take 2 years just to build a pipeline, right? Just to
Oh yeah.
build things up. And so like now my inbox is constantly full of deals, right? But that took time, right? Like you said, it took me calling bankers and brokers, us being on PitchBook, right? Our firm being established on PitchBook as an established firm, that helps, right? Just
Oh,
having
tell us about that. How did PitchBook help your firm?
yeah, so PitchBook is a platform that, if you to me, it's a credibility platform, right? If you're on PitchBook, that means you consider it legit, right? If you will, in
Mhm.
my opinion. So most private equity firms are on PitchBook. You have to, yeah. I'm not sure if you apply or how the process works, but we end up getting on there. So the way it helped us was deal flow, right? I mean, most
Yeah.
people that want to shop deals, whether they're a banker or they're a broker, they can get on PitchBook if they're subscribed and they can get a list of all the qualified shops, right? And then they can send
Mhm,
deal flow
mhm.
out. So I see stuff from bankers I never heard of now with deal flow. So I think that was one benefit. I think from an investor perspective, there's somewhat of a benefit, right? But mainly it's been deal flow.
Okay. And, tell us about your ideal type of investor. Who are you looking for, and how did you set up, your investment process? You have a fund, I assume?
Yeah.
Okay.
No, no, no.
No.
So we don't have. So at this moment, we don't have a fund.
Oh, okay.
But our deal.
Pro
So go ahead. Sorry.
I was gonna say, so it's a project by project basis?
Yes, yes,
Okay.
yes. That's our model. Our model is project by project. Maybe we'll raise a boutique fund at some point, but we like the deal by deal model, right?
Okay.
It works for us right now. We don't want to be tied, like unless we can get. Me and Evan talk about this a lot. And by the way, I got to give a shout out to Evan. Evan is the VP of the firm. Oh my God, he's a rock star. I mean, if you ever get a chance to meet him, you'd be blown away. So I want to give a shout out to Evan Brindley, phenomenal individual. But
Mm.
we talk about raising a fund, but we don't want to be pigeonholed, right? Because you start raising a fund, right? You get kind of pigeonholed. So we're like, look, you know, maybe one day we'll do it, but right now we like the deal by deal model. The economics work
Yep.
perfectly, right? Investors like that as well, right? They get to cherry pick, right? Um,
Yeah, I
so
think investors do like to cherry pick,
yeah,
a
yeah,
lot of
yeah,
times, particularly people in private equity that are,
that's right.
they're doing something a little outside of the norm. They're not just, handing their money over to a Wall Street fund that'll diversify them across, 1,000 things.
That's right. That's right.
They're involved.
Yeah. And to answer your question, you asked me about, what kind of investors. Our model is we want to do good deals with good people while striving for great returns. But who are those
Mhm.
good people? We're talking the investors are good people, right? Like we don't want to get in bed with an investor that doesn't understand, right? So we want an investor that we can educate, that they get it, right? They understand the model, they understand what we're trying to do, where we're trying to go, right? We're okay with educating them, but do they understand it and get it, right? We don't want an investor that's gonna call us every 5 minutes, right? Asking where their money is. Like we don't, you know.
I had an interview with an investor who proceeded to tell me how they were filing lawsuits against their previous employer. And,
Wow.
I was very polite with them and said, "Oh, yeah, thanks.
Yeah.
It was great to talk to you. Talk to
Yeah.
you later. Bye."
Yeah. No, you're right. No, you're absolutely right. So those are good people, man. It's just look, Sun and Moon Capital. It's not about us. I always tell Evan, look, our investors are our customers, right? They're our customers, right? Um, let's understand them and see what they think and how they feel and what's their pain point and what are their issues. And so we spend a lot of time just listening to our investors and trying to understand like, okay, what's really keeping them up at night, right? If we could figure that out, then we can be better at doing what we do. But it's really not about us. It's about our
Mhm.
investors. It's about those companies and all that. So
I forgot to ask, do you have a geographic area that you tend to stay to, or can you drive to all the businesses that you're investing in, or are they more dispersed than that?
yeah, a little more dispersed. We are starting to get a focus. So I'm on the East Coast.
Mhm.
Evan is in Boston.
Okay.
We are starting. We haven't done it yet, but we have been thinking about maybe just focusing on the East Coast, right, where we can just easily hop on a plane and get to where we need to
Yep.
go. But right now, we're somewhat geographically broad. I mean, only in North America though. We won't go outside of North America.
Yeah. Okay, well, let me ask then: are you concentrating mainly in the area that you and Everett are in, or is it wider than that? And if it is wider than that, what do you do for hiring? The local. How do you go about hiring the local managers? You have to fly
Yeah.
down there, spend some time there, kind of build the business, and come back.
No, so great question. Great question. So no, it's a little broad,
Okay.
but our model, we're not operators. So what we do is we take a board seat, right? So
Okay.
we guide from the board. So when we look at a company, and this is why we had to go up market, right? We had to go to that 1.5 million EBITDA business, 10 to 20 million in revenues, because typically you start to find some nice middle managers there. You start to
Right.
find some people that you can probably promote up. Or
Yep.
we like to partner with that founder that wants to have a liquidity event, but also wants to stay in the business, right? So
Yep.
yeah, so to answer your question, we're more board members. We're not in there in the day
Gotcha.
to day, right? We don't have that type of expertise, right? So we're bringing
Okay.
more corporate governance. We're bringing structure. The two main
Okay.
things we do best at Sun and Moon Capital is go to market strategy and operational improvements. That's it, right? So
Gotcha.
we
So
that's our
you're
whole
coming
focus.
in, you're for the most part keeping the existing management structure that's there.
There
You're
you go.
you're providing a capital infusion. You're providing, training and expertise on operations and just in business efficiencies. And you're really giving, that operator the flexibility to grow and expand their business through, both training and capital.
See, you get it.
There it
That's
is.
it.
But
And look, and
are you looking for, being like a majority shareholder, or do you come in and buy like a 10% stake? What's your strategy in terms of how much of the equity you wanna own?
typically we're doing a full, not a full buyout, but a majority buyout. So
Majority
anywhere
buyout. Okay.
between 70-80%. We like to have our model in all of our structures. We typically have the owner roll some equity, right? So
Mhm,
maybe they'll roll 20-30% of equity, right? We try to keep them in the game as much as we can. That's a part
mhm.
of our structure. It doesn't have to be that way, but it's always great. Investors like to see that too, right? They like to see that the
Oh,
owner still
absolutely.
has some skin in the game a little bit. But yeah, that's kind of how we structure in our model
Do
as of
do
right now.
you do you foresee that manager or that person, continuing on there for the next 10 to 20 years, or is it on a case by case basis where you're coming in and saying, "Hey, we see that you're getting ready for retirement. You can stay on for another 5 years and we'll gradually, transition you out, and you'll have sold your business, but you'll still get to maintain, your passion project until you decide to retire."
Yeah,
Are you going for the younger operators, or are you targeting those that are retiring? I guess is my question.
case by case, right? I could tell you
Yeah.
what we love to see in our current deal. You have the owner is absentee. We love to see absentee ownership, and if the business is still doing well, right? We love
Hmm.
that. But it's really a case by case thing, you know. If
Okay.
we have to go out to the market and find a CEO or an executive, we can. But you always want to try to stick with the folks that have been there, right? And you're just
Yeah.
bringing some added improvement, right, to the business. That's typically what you're trying to do.
Right. All right. Well, Javar, I am looking forward to you presenting on in our Friday meetings at the Alternative Investing Club. We have a meeting every single Friday at noon, and I definitely want to invite you in for that. And so I always ask people this question as the closing question because I'm a
Yeah,
bookaholic. Can you
yeah,
recommend a book? And it doesn't have to be an investing book; it could be any
right.
book. But do you have a book recommendation you can give to the people in the Alternative Investing Club?
Gee, so many. And I'm not even gonna.
Put you on the spot a little.
Yeah, I'm not even gonna make it an investment book. I'm just gonna. Geez, since I just got finished with it not too long ago, I would say The Boys in the Boat.
Okay.
I would say The Boys in the Boat. About
What's it about?
the Olympic rowing team that
Oh,
went to Germany during the whole Hitler regime and actually end up winning.
oh,
It's a phenomenal story, but what it showed to me real quick and for your audience, it showed me that rowing is the ultimate team sport. There's no sport that's as much. I mean, you talking about a team. Rowing is the ultimate team sport. And even though at Sunderland Capital, you see the baseball theme because I love baseball. But I'm now looking at this rowing thing and I'm like, man, how can we be like the rowing? And here's why I say that, Daniel. You can never look in the boat and tell me who was the best rower in the boat. You just can't
Yeah.
do it. You
They all
can't
got
do
to
it.
be in sync or it doesn't work.
Bingo. Bingo. So we all, me, you, Sunderland Capital, we doing this. Everybody has to be in sync.
Yeah.
Oh, we don't get
Yeah.
across the finish line. So anyway, it's
All
great
right,
book.
Javar, it has been a pleasure talking to you, and thank you so much for coming and sharing with us. I hope you have I hope you're out there investing to live and to give abundantly.
Yeah, we are. Thank you so much, Daniel. Look forward to chatting later soon at some point.
All right, cheers.
All right, bud. All right, bye bye.